Markets are in panic mode. ETF outflows just hit their worst day since March. The Fear and Greed Index is flashing a brutal 3 out of 100. And yet, the Bitcoin chart says something completely different. We're seeing hidden bullish divergences, strategic buybacks, and whispers of major deregulation. Could this be the bottom before liftoff? Or just the calm before the real storm? In this video, we'll connect the dots no one else is seeing and show you how to position yourself smartly for what's coming. Let's dive in. Bitcoin is sitting around $77,000, but look at what's happening beneath the surface. On April 8th, Bitcoin ETFs bled $326 million, the biggest single-day outflow since March, with BlackRock Bit leading the dump at $252 million. Meanwhile, stock sentiment has completely collapsed. The Fear and Greed Index? Just 3. That's extreme fear territory, the lowest since we touched 2, right before the last massive rebound. As Bitcoin is currently correlated with the traditional market, it is extremely important to keep an eye on this data. So, the big question becomes, are we witnessing capitulation or the early stages of a deeper crash? Well, the price action gives us clues. On the weekly chart, Bitcoin could be testing the 1.0 fib level at $68,990 after rejection near the 1.618 extension. But more importantly, the SuperTrend remains green. We're still in an uptrend on the macro frame. Now, look at the Heikinashi RSI, HARSI, below. We just touched the oversold zone, a place where previous reversals sparked powerful moves up. In the past, this kind of HARSI dip during a green supertrend has preceded explosive runs. And if the 2.618 Fibonacci level at $155,590 becomes the next target, then this dip might be the biggest opportunity since 2020. But that's not the only signal flashing green. According to Crypto Rover's chart, spikes in S&P 500 volatility VIX often mark major Bitcoin bottoms. It happened in 2016. It happened in 2020. It's happening again right now. This week's VIX surged over 134%, and historically these spikes have been precursors to massive Bitcoin rallies. Pair that with ETF fear, extreme sentiment, and technical confluence, and you've got a recipe for generational opportunity. But there's even more beneath the surface. Let's talk about what the pros are doing. On Aave, you can now borrow Tether for just 3.2%, a sharp drop in demand that screams one thing: retail is scared. Smart money sees the signal. And what's the Aave DAO doing? They just approved a $1 million weekly buyback of Aave tokens starting today. Why would a DAO buy their own token during a market downturn? Simple. They know the storm is temporary, and they're accumulating while others panic. You would think regulators would tighten the grip, right? Wrong. The U.S. Treasury Secretary just said the government is actively removing regulatory barriers for Bitcoin and crypto. Not tightening, removing. And he's not alone. Trump is back on Truth Social screaming. This is a great time to buy. Agree or not, this kind of pro-market rhetoric affects retail psychology and institutional behavior. And combined with the Treasury's stance, it's giving the green light for re-entry. So, if you're watching this video feeling stuck, overwhelmed, or unsure whether it's time to jump back in, here's the truth. Most people only make money in bull markets, but DeFi lets you earn in any condition. Staking, yield farming airdrops, it's what separates passive holders from proactive earners. If you're new to DeFi, or want a smarter way to position yourself while the market decides its next move, grab my ebook, DeFi, Financial Freedom, the Ultimate Beginner's Guide. It's just $4.99, less than a coffee, and it's already helping beginners earn with real DeFi strategies. No fluff, no tech jargon, just actionable steps to grow your crypto passively. Link in the first pinned comment. You'll thank yourself later. Amid all the fear, Polygon's on-chain activity is exploding. Token Terminal reports that monthly active addresses across Polygon dApps are nearing all-time highs, driven by names like Circle, Tether, Galaxy, and Sky. This isn't retail hopping in. This is infrastructure getting built, real users, real demand. And you can bet that capital rotation will come, especially if Bitcoin stabilizes and capital seeks altcoin outperformance. Morales highlighted something important. Bullish divergences are forming on both short and midterm Bitcoin charts. Price is flat or falling, but RSI is rising. This is often the spark before reversals. But we're also in uncharted waters. Trump's back. The Fed's uncertain. ETFs are bleeding. So, what do? Zoom out. Review your thesis. Double down on conviction or build one. And if you're stuck, start with education that actually helps you earn. Right now, the market is panicking, but the tools for wealth creation are right in front of you. You can let the fear freeze you, or you can position yourself now, while others run scared, and be ready when Bitcoin targets $102,000 and eventually $155,000. So ask yourself, will you wait for the headlines to turn bullish, or will you act when it matters most? Smash the like button if this gave you clarity. Comment your thoughts below. Are we in a trap or a launch pad? And don't forget to subscribe. New videos drop daily to help you win in crypto. Check out my last video for more strategies. It's linked right here on screen. This is Crypto Yield Pro, where smart money gets smarter. See you tomorrow.